The information provided on this website and in our communications does not constitute financial advice and as such should not be relied upon. We recommend speaking to a qualified mortgage advisor to assess your individual circumstances before making any decisions. Your home may be repossessed if you do not keep up with payments on your mortgage.
Still loving the great outdoors here. It's nice to be out of the office. Next question. I forgot to pay my gas bill last month. Did you? That's okay, right. Well, no, depending on the time of year, you might be very cold if they come and cut you off. Forgetting to pay a bill. Yeah, lender dependent if you're dependent on what you're looking to do. So if you're purchasing a property, it's important that for the majority of lenders, I'm trying to think here, in fact I think for all lenders you need to be up to date with your bills basically. I think so, maybe an exception. I'm just trying to think of specialist lenders who might do that, but yeah, you've got to be up to date. For the vast majority of lenders, you've got to be up to date with no missed payments. Some lenders will actually state that you need no missed payments within the last 12 months, 2 years, 3 years. Some lenders are okay if you've missed a payment and caught up. It's really, really important, especially if you're looking to purchase a property, that you're up to date with your bills and your credit as far as you can be. It's really important. When it comes to remortgaging, again, they can sometimes impact missed payments for utility bills, can impact on things like remortgages. But if you're doing a product switch where no affordability is taken into consideration, speak to your broker, explain that, then sometimes they won't affect. But in the main, yes, the short answer is yes. Forgetting to pay a utility bill, if it's registered at credit reference agencies, then it can impact on your ability to purchase and to remortgage. Okay, next question. Out in the sunshine-ish, let's have it. I have some defaults. Can I still get a mortgage? Depends. Yeah, always the answer to this question, depends. It's still possible. But the likelihood of getting a mortgage with a high street lender is going to be tricky. But there are some lenders out there who are okay with defaults. Depends on the type of default and the size of it. So if it's under a certain amount, so if it's under say £500, and whether it's been satisfied or not, whether you paid it off or whether it's still live, when it was, that's a key thing. Okay, when the default was, because a lot of lenders have rules of if it was in the last 12 months or if it was in the last 2 years, 3 years. Each criteria of the lender is different on their rules for defaults, but in the main, you tend to be more down the specialist end of the mortgage market, and because of that, the specialist end, they tend to be higher interest rates, more charges and things like that. But the short answer is yes. Don't panic. If you've got defaults on your credit report, speak to your broker, give them a full copy of your credit report, and by that, that's not a screenshot from your ClearScore or anything like that. You need a full credit report showing all your credit history over the last 6 years, and they'll be able to point you in the right direction for a lender who may be able to consider a mortgage even though you have defaults. So the answer is yeah, more than likely. And now the sun's in my eye. Nice. Good. Let's have the next one. I want to buy a further share of my home. It was complicated. How do I do this? Well, you're right. It's extremely complicated and very, very time consuming. But we love, that process is called staircasing. Okay, so if you're a joint ownership property, and let's just say you own 20%, and you wish to purchase a further share a bit further down the road because maybe you've got more income, you've got come into some money, you want to buy a larger chunk of your home to bring your percentage up and that rental payment down from the housing association, and that process is called staircasing. So when you are setting up the mortgage in the first place, it's important that any mortgage that you do allows staircasing. and usually staircasing to 100% is normally a good option. So when you're looking to purchase another share, you would need to contact a broker. Doing this by yourself is very, very time consuming and quite tricky doing it yourself, but extremely time consuming because you need to liaise with a lot of each agency, the housing association, the lender, and do it all. So it can be quite time consuming. So speak to your broker, let them know what you're looking to do, purchase another what percentage you're looking at, discuss what the payments are going to be. They'll work out affordability and what have you, and then place that mortgage with the specific lender who will allow staircasing. It might not necessarily be your current lender. Again, depending on who your broker is, whether you've got access to the whole of the market, it might be a good idea to remortgage, certainly if rates have come down and it's in your financial interests. But again, your broker will tell you that. But yeah, in order to do it, it is very complex, but not something that we haven't done many times. So yeah, the process is called staircasing, and it's more than possible.